in the modern era, and universally we have certain few confusions regarding the Sharia permissibility of the same. As we have a prominent personality who is an expert in our topics, so I am not entering to the theme deeply. Now let me get into my task. It's my privilege to extend my warmest welcome to the chief guest of the day, my beloved teacher, Mr. Shamil Sajjad, PA, CEO of Finbus and Zerba Holdings. Sir, we are delighted to have you even on during your busy schedule. Then it's my immense pleasure to offer my heartiest welcome to the principal of our college, Dr. Syed Muhammad Shakir sir, who has been very supportive with all our events. Then I'm delighted to welcome the very energetic Mr. Ibrahim sir, HOD of Department of Economics with Islamic Finance. Last but not least, it's my bounden duty to welcome the vibrant and multi-talented Dr. Sabir Nawaz, the man in charge of webinars of our college. And let me take this opportunity to extend my warmest and heartiest welcome to all and everybody here. Once again, I would like to welcome you all with great heart and humility. Thank you. Assalamu alaikum.
Thank you, Muhammad Hashmi, for your delightful starting of this day, and head of the department and our team leader, Ibrahim PK, will do the chair. Sir, please. You can just unmute yourself and start.
Assalamu alaikum wa rahmatullahi wa barakatuh. Respected principal of our college, Dr. Syed Muhammad Shakir sir, today's center of attraction and resource person, Mr. Shamil Sajjad, CEO of Finbus and certified capital market dealer and mutual fund advisor, Hashmi sir, assistant professor Islamic finance, Professor KP Abdul Rashid sir, IQSC coordinator, Dr. PN Abdul Ahad sir, HOD Arabic department, Dr. TK Yusuf sir, staff council secretary, Dr. N. Muhammad Ali Ansari, coordinator in Axel, and Dr. CM Sabir Nawaz, who is the backbone of this event and providing his expertise and all intellectual and technical support, Abdul Latif sir, Jamshir sir, assistant professors in economics, and all other faculty members in our institution and faculties from other institutions, students, and all other participants from different parts of the world. As we know, now we are going through a very different kind of situation which we never experienced before in our life. Today, the entire world is stuck and shocked in front of pandemic COVID-19. We know the impact of COVID and lockdown has very huge in our economic activities in general, in particular, and on an economy in general. And actually, this declining trend in economy was not completely started and entirely due to the lockdown period. It is also happening in past decades. So the before period of COVID also, the condition of our economy was not as sound, and COVID made it more worse, especially in India. According to the opinion by some rating agencies and our chief economic advisor also, our GDP growth is going to be negative, but it was not entirely because of the COVID, as our former Reserve Bank Governor, Mr. Raghuram Rajan, said that the declining in Indian economy is not only because of the COVID. It has been started from many years back, especially after 2007. The entire world was going through severe economic crisis, so that the level of business confidence and the volume of investment was very low in the world. Therefore, the world was looking for an more stabilized, justified, and an alternative economic system. Now the significance of Islamic finance has come. So since the past 10 years, the significance of Islamic finance has been increased very high. So in this situation, we have to analyze the Islamic perspective of stock market, because we know stock market is the one of the better indices to know the economic condition of a country, and it is very sensitive also. In this scenario, the Department of Economics and Islamic Finance of Madinatul Ulum Arabic College has decided to conduct this type of a event. Alhamdulillah, we got a suitable person to deal with this topic and interact with us. We have Mr. Shamil Sajjad PA. He is the certified stock market dealer and the mutual fund advisor also. So we can expect he has the many expertise and the theoretical knowledge and the practical experience in this world. And he can clarify all our doubts relating to this topic also. So when we decided to conduct this kind of a program, we got huge support from other faculties from our college, especially from our principal, Dr. Sayyid Muhammad Shakir sir. He has always with us this kind of innovative programs decided by the department, especially when we conducted a international conference on Islamic finance in previous year. Then that time also he has given immense support to us. And we have Dr. Sabir Nawaz sir. He is the think tank of this program. And I remember the effort by Salahuddin sir, Nawaz sir, Munir sir, and other faculties from the Department of Economics and Islamic Finance in this time. So I'm not taking much time. Let me conclude. I congratulate all the participants from different parts of the world. So with all respect, I invite Dr. Sayyid Muhammad Shakir sir, Principal Madinatul Ulum Arabic College, to inaugurate this function. Sir, please.
Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillah, wa salatu wa salamu ala rasulillah wa ala alihi wa sahbihi ajma'in. Dear colleagues of Madinatul Ulum Arabic College and my friends, participants from all over the world, we are very grateful in this occasion to address you in such a very relevant topic regarding Islamic finance and economics. Here, Department of Economics and Islamic Finance of Madinatul Ulum Arabic College have organized this program in continuation to the different programs that organized in the previous days. As the department head, Mr. Ibrahim mentioned here, we have organized a very important international seminar in this subject before 2 years in this college, and participated many experts in that program and shared their views to different people who are working this field. As we know that Islam gives instructions and directions that cover all areas of our life. Islam doesn't leave the very important area of Islamic economics and financial transactions. Islam says that all our financial transactions, whether it is our income side or it is our expenditure side, that should be halal, that should be permissible in the view of the Almighty God. No haram should enter to our life at any cost. And Islamic finance is based on interest-free economic system. And it looks to all the trading, everything, with the eye of that whether it is connected to interest or not. In such a way, we have to look into the new interest. Ahalallahu al-bay'a wa harrama riba. And Islam says that you are allowed to eat your food if it is halal, and you are not allowed to eat your food if it is haram. That is the view of Islam in this area. In the emerging new styles of business, we can see share market, stock exchange, and many other new types of trends. And we have to check what is the stand of Islam towards all these things. Here we have to we are going to discuss about the important and relevant topic related to business, finance, and share market. We got a very prominent and suitable faculty here to discuss about, to introduce about this matter and to explain the all aspects of this important area. Mr. Shamil Sajjad, he will explain us all the areas of this topic, and he will be able to clear all our doubts regarding the topic. Then I don't like to prolong my speech here. For the Madinatul Ulum family, I again welcome you all to this program, as Madinatul Ulum Arabic College has a great history in the social, educational, and cultural field of our life in Kerala and India, and in global level also. We have many alumni, and this great institution has been established in the year 1946, before the independence of India, and it contributed a lot of scholars who are serving different walks of life. And we have great pleasure in this occasion to welcome you all to this function. And I would like to conclude my speech by these words. And I do invite Mr. Shamil Sajjad to come over the program and to handle the topic. Wa akhiru da'wana anil hamdulillahi rabbil alamin. Assalamu alaikum wa rahmatullah.
Thank you, sir, for your kind words and support. With all respect, now I invite Mr. Shamil Sajjad PA to deliver his talk. Please, sir, please welcome.
Assalamu alaikum.
Walaikum assalam wa rahmatullah.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله السميع العليم. والصلاة والسلام على رسول الأمين وعلى آله وصحبه أجمعين. ما بعد. Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, let me thank Madinatul Ulum Arabic College and the organizers of this event for organizing such a meeting, a webinar over the online platform on a topic that is very relevant during our times, which we should not neglect and which we should see in the Islamic perspective and understand what Islam says about it, and think about how we can contribute or participate constructively in this sphere in the coming decades, inshallah. So today's topic that we are going to discuss is stock market, Islamic perspective. So in this particular webinar, in the next 30 to 40 minutes, I would like to cover the following areas. So the part one, in the first part of this particular webinar, we will be talking about the Sharia's perspective, that is the Islamic perspective. And in the second part, we will be dealing with the trading fundamentals, because those people who have attended this particular webinar would be also interested in knowing how exactly are we going to do trading, or how we are going to participate in the stock market. And they would be looking at some basic ideas to get a start. Maybe there are people who are involved in the stock market for a very long time and who would have advanced knowledge in this area. But what I am doing here is to give some starting ideas, some fundamental ideas, so that we can build upon that in the coming days and in more presentations or in more seminars which we will be able to do inshallah in the future. It will not be right for me to go to advanced concepts, because that will skip a lot of people who are coming into this area for the first time. Okay, so in the first part we will be discussing about the framework of Sharia. What is Sharia? Sharia is the code of law in Islam. So there is a difference between Islam and Sharia. Islam is the deen, it is the ideology, and Sharia is the particular body of law that we discern from the basic sources of Islam. Then we have basic principles in Usul al-Fiqh, which we need to understand for an understanding of the rules that we are going to discuss afterwards. And we need to understand the major prohibitions in muamalat. Then we will move on to OFI Sharia screening norms for shares, transactions and instruments to avoid in the stock market for a Sharia compliant trader, Sharia compliant trading process, a framework for the Sharia compliant general trading process. In the second part, we will be looking at designing and executing a trading strategy, a fundamental trading strategy. Then we will get to know about the basic styles of trading, importance of basic charts and indicators, identifying entry opportunities with the trends, indicators for confirming uptrend, then trade management and making timely exits. This is what we are going to do in today's session. So let us start off with the basic framework of Sharia. If we look at this particular picture, which I hope you can see on your screens, what we can see is that the religion that is what we are referring to as Islam, it has got a basic Sharia, and the Sharia is derived from four basic sources: the Quran, the Sunnah, the Ijma, and Qiyas. These make the sources of Sharia. We get all the rules regarding our life, which we collectively call the Sharia, from these four basic sources. Among these, the Quran and Sunnah are the primary sources, and Ijma and Qiyas. And you can also add Ijtihad to this. Anyways, those are secondary sources. They don't have any relevance without the primary sources. And towards the right and left, we can see protection and public welfare. They are put there in the sense that that is the maqasid, two of the maqasid of Sharia. What Sharia stands for, why it is there. We need Sharia. Allah has given us the deen, and we have derived a Sharia from that for the protection of the humankind and for public welfare. We can further expand that like hiflul nafs, hiflul aql, like that, but I'm not going into the details and all. So basically, Sharia addresses two areas of human life. The first is the ibadat, and second is the muamalat. Ibadat are those things in human life which comes between God and man. That is all the transactions between the creator and the creator, the created and the creature. We refer to that as ibadat. And muamalat refers to those things which are between people, transactions, financial transactions, and which basically deals with human contracts on this phase of the earth. So these are the two areas. There can be more classifications like akhlaq and all, but as that is not relevant to our discussion, we will confine the classification to these basic two things, ibadat and muamalat. So what we have to understand here is that we have a deen, then we have a source of Sharia from where we derive all the rules for our lives, or where Allah wants us to derive all the rules for our lives. And in that, we have major two areas, ibadat and muamalat. So now we would understand the basic principles, which we call the usul al-fiqh. That is the basic principles which guide the designing of laws or deriving of laws from the basic sources of Sharia. The scholars call this usul al-fiqh because these act as the fundamentals on which all the rules are derived And this usul al-fiqh, one of the usul al-fiqh is that as far as ibadat is concerned, everything is prohibited except what is permitted and commanded by the sources. Now, this clear understanding of this is very important because many people come up with a lot of doubts, like whether this is permitted, whether that is prohibited, etc., etc. If we have an understanding of this basic usul, we will be having a lot of clarity, like what it is actually that is forcing these rules on us, or what is the actual source of these rules. Okay, so in ibadat, the fundamental, the usul al-fiqh is that everything stands prohibited. Everything is prohibited by default. What becomes permitted is whatever is commanded or whatever is explicitly permitted by the sources of Sharia. Whereas in Muamala, it is the opposite that is true. Everything is permitted except what is explicitly prohibited by the sources of Sharia. So you don't have to ask whether we can eat apple, whether we can eat mango, whether we can go to school, whether we can drive a car, whether we can get into the bus, because that question does not have any relevance, because everything is permitted for you except what has been prohibited by Allah subhanahu wa ta'ala through the Quran, through the Sunnah, or whatever seems to be prohibited in the light of ijma, qiyas, and ijtihad. Okay, so Allah says in the Quran, "Khalaqalakum ma fil ardi jami'a." Allah says that everything on the face of the earth has been created for you, explicitly for you. Everything that is there is for you. It is at your disposal, and Allah has made it permissible for you. And then He moves on to the prohibition, except this, except that, except the third thing, like that. So we have to understand that everything that is there on the face of the earth is permitted by default for us. To Adam alayhi salam, Allah said, you can wander, you can go through the Jannah of Allah subhanahu wa ta'ala as you like, but keep away from that one tree. That is the only thing prohibited for you. That was the only thing that was prohibited for Adam alayhi salam. So Allah should say through the sources of Islam or the source of Sharia that this particular thing is prohibited, and we need proof for that. Nobody in the world can come to a Muslim and say that this particular thing is prohibited for you without an explicit proof that he can produce from the text, that he can produce from the sources of the Sharia. Nobody has got that power, or Allah has not given that privilege to anybody on the things of proof in bad things, don't cooperate in wild things, but cooperate in goodness with each other. So it is prohibited for us to cooperate with a particular company or provide your capital to a particular company which is outrightly engaged in an activity that is which is against the principles of Sharia. So that is the first level of screening. What is the second level of screening? It is the leverage screen. What do you mean by leverage? As financial students, we will understand that leverage is the use of debt in your capital. It is the use of debt in your capital. So if you have 100 crores of capital and you are using 77 percentage equity, sorry, 67 percentage equity and 33 percentage debt, the leverage ratio is 33%. Okay, so it is debt divided by total capital. That is the leverage ratio. Now, how does leverage ratio become a Sharia screening norm? What is the relevance of leverage screening for Sharia? Okay, we can understand that we should find low leverage companies for fighting healthy companies, because high leverage is never healthy as far as companies finance is concerned or capital structure is concerned. This is an accepted principle in finance, but how does it affect Sharia principles? We need to understand. And here you should note that we are not talking about interest based debt. We are not talking about only debt that is interest based. You are talking about any kind of debt, whether it is interest based or whether it does not carry any interest. Okay, so you have capital, you have to see the leverage screen. Why? Because there is a rule in Sharia. That rule is called by Adde, the rule of transaction in debts. Sharia says that for a transaction in debt, that is, you are transferring debt from one person to other. For example, I am A. There is a second person, B. I have to give 1 lakh rupees to B. There is another person, C, who comes. And I say to C that, C, you give me 1 lakh rupees now, and I will transfer the debt that I owe to you. Okay, so there is a transfer of the debt obligation between these people. Sharia says that any transfer of debt should be at par without any decrease or any increase or decrease. When you transfer debt to another person, you should not increase the value or decrease the value. It should be as it is, at par. So there is no discounting of debts and there is no premium on debts as far as Sharia is concerned. If there is any discount that is stipulated or if there is any premium that is stipulated, that means it is interest. It falls under the category of riba and nasi'a as far as Sharia is concerned. Okay, so all those companies which has got a major component of debt in their capital structure, that particular share is the financial instrument. So if there is a major component of debt in that particular share, what we will do? We will treat that particular share as debt itself. Because there is a rule in Sharia that the rule of the majority applies to the whole. The rule of the majority applies to the whole. So if debt is majority component in the share, the rule of debt will apply to the share itself. If debt is minority component, then the rule of equity or trade will be applied to that particular share. I hope you are clear. If you have any doubts, you can ask in the question and answer session, provided we have the time there. Okay, then next is the companies with liquidity. Why liquidity is important? Because there is another rule in Sharia, the rule of sarf or equality. What you have to do when you are transacting or exchanging money for money, it should be in equal quantities. You cannot increase or decrease, just like the rule in Bayad. So if you are transacting very liquid companies, what do you mean by very liquid companies? Those companies which has got a very high liquidity, where fixed assets are very low. Such companies you have to transact at par. So what the OFI has done here is that the OFI has stipulated 90%. If a company's total assets 90% of that is liquid. We should treat that company as a very liquid company. That is, it is equivalent to cash. We are transacting actually cash to cash. So that is the third Sharia screening norm. The fourth Sharia screening norm is regarding interest income or haram income. We are not talking about those companies which are actually engaged in haram operations, but we are talking about those companies which are actually engaged in operations that are halal, operations that are perfectly lawful as far as Sharia is concerned. But as we are living in a society where the interest-based operations are so rampant, we are surrounded by that. There is no escaping it because the macroeconomics is based on interest. Even if you are a PWD contractor, you will know that you have to put a deposit with the government on which you will earn interest. If you have to apply for sales tax registration, you have to put a deposit with the government on which you will be receiving interest. So companies will have such infiltration of interest into their income, which they are not doing purposefully. They are not doing it for earning interest, but it is a systemic infiltration of interest income to their accounts. As individuals also, we find that we are credited with some amount of interest in our savings bank accounts, although we don't need that. Similarly, the case with companies also. So OFI has stipulated a particular standard: the total revenue of the company, if the interest or the earnings from haram income, the earnings from haram sources is 3% or more, you should skip with that company, because chances are that the company is making interest bearing or interest receiving investments. Okay, so these are the four levels of screening in sequence. First you do the business screening, second you do the leverage screening, third you do the liquidity screening, and fourth you do the income screening. Whatever companies are left, they are called the Sharia compliant companies for our purpose. We can rather safely, or rather more in a more Sharia compliant way, paying respect to the Sharia framework, and also keeping our intention that we want to engage in the market in a Sharia compliant way, we can buy the rest of the companies. We can do buy and sell in those. This is the idea. This is the whole idea of Sharia screening norms. Okay, so let us go and that was the screening process for Sharia compliance of shares. Now, even in Sharia compliant shares, you have to avoid these three types of transactions. Even if a company is Sharia compliant, you cannot do short selling with that. You should not do short selling. OFI prescribed it in its norms. What is short selling? Short selling is uh, when a market is falling, or the price of a particular share is falling. You understand that this particular share is going to end up somewhere lower than its current market price. So what you do, you actually put a sell order first. You put a sell order first. It can be on an intraday basis, or it can be on a delivery basis. If it is on a delivery basis, your broker should have those shares in its pool account, because the buyer should get delivery of that. If it is an intraday basis, what you do before the market closes, you will buy the same quantity of shares and the transaction is squared. So short selling is putting a sell order on those shares which you don't actually have. You don't have that share in your demat account, dematerialized account. You don't have that ownership or possession of those particular shares. So short selling is prohibited in Sharia, because there is a rule in Sharia which says you cannot sell what you don't own. You cannot sell what you don't own. You can sell anything only if you have the ownership, if you are the legal owner of that particular property or commodity. So short selling you cannot do. Next, you cannot deal in futures and options as they are seen today. We have Islamic futures and options. The products are getting developed in certain countries, and you are also seeing the emergence of the Islamic futures and options markets. But we are not talking about that. futures and options, as we see it today in Indian markets or in the any of the other European or the North American countries, these futures and options, according to the majority opinion of these scholars, they don't stand permissible because of two Sharia rules. As far as futures is concerned, there is a Sharia rule that either payment or delivery can be deferred to a future date. If you are deferring payment to a future date, delivery should be on spot. If you are deferring delivery to a future date, payment should be on spot. Either of the two can be deferred. One has to be on spot. Okay, so this is particular thing that is violated in futures contract. As far as the options market is concerned, it is a
Video.
contract. It is a contract between two people. It is a contract between two people where if one person makes a gain, the other person will definitely make a loss. If the other person makes a gain, this person will definitely make a loss. Only either of the two will make a profit or loss. So it will fall under the category of myself. So you cannot indulge in futures and options as it is seen in today's markets. Third thing to avoid is any margin that the broker gives you for taking a leverage. That is, for example, if you have 1 lakh rupees in your trading account and the broker is giving you 5 times margin, and on that margin you will be required to pay interest. Okay, if that margin is of that sort, an interest bearing sort, if it is interest free, no problem, you can avail that credit. But if it is carrying an interest, then such interest bearing margins should be avoided. It will not be Sharia compliant because Sharia clearly states that any interest bearing loan is prohibited. Okay, so these will sum up the Sharia considerations as far as the stock markets are concerned. First of all, the shares should be Sharia compliant. They have to go through a screening process, or you individually have to check whether they are Sharia compliant according to the Sharia screening norms stipulated by Accounting and Auditing Organization for Islamic Financial Institutions. Second thing, you have to avoid the prohibited kind of trades in the stock market. Fine. Now, let us come to the second part of this particular webinar. Now, as we have understood the basic rules, the basic screening process, etc., let us understand how can we practically go into the market and look to profit or look to participate in the market in a creative way, right? So what we have here Sharia trading process, the basic framework where people will earn profit in the stock market in a Sharia compliant way. In a Sharia compliant way. First is you have to buy Sharia compliant shares. That is the starting of the trading process. Second, you have to hold it irrespective of the time. Please pay attention, irrespective of the time. It can be a very short period, like you bought in the morning and sold in the evening. No issues with that. There is no evidence that prohibits that because Sharia does not stipulate any time period for holding any asset before it can be sold. Okay, so you buy Sharia compliant shares, next you hold it, then you sell it for a higher price, irrespective of the amount of profit, then you earn a profit. This is the only way you can participate in the stock market in a Sharia compliant way. If you try to sell first, hold it, and try to buy it at a lower price, which is short selling, that has got a Sharia issue. What you have to do, you have to get into a long position first. Buy something which has got a risk element because Allah's Prophet said, Al-Kharaj bil Laman. Profit is only through responsibility. Profit is only through taking a risk. That is this. Buy a particular Sharia compliant share, hold it for a period of time, irrespective of the length of the time, then you have to sell it higher, earn a profit for undertaking the risk in trade. This is how trade works as far as Islam is concerned. Okay. So you have to follow this particular framework. What is the next thing? What is the next thing? So the next thing is you have to follow and design. Sorry, you have to design and follow a strategy. I am not talking about the Sharia aspect is over. Sharia aspect is over. You have understood the Sharia framework, but you want to understand how we actually can make consistent profits in the markets, or actually what is the process of uh, making profits in the market. Then you should have an understanding of other basic things in the market, like proper trading systems, proper way to enter and exit, what are the tools required for analyzing the market, tools of fundamental analysis, tools of technical analysis, etc. That's all like it's like farming. Like you know that you should not do certain things in farming. That is what the deen tells you. It is like trading, some physical trading. You have a shop. Sharia tells you that you should not do black marketing. You should not cheat people. You should not involve in those type of transactions which are not against Sharia. But in order to succeed in that particular trade, or in order to succeed in that particular business, you need to understand that business, right? If you don't have any knowledge of that business, if you don't have any knowledge of what is happening in that business, how it can be done profitably, you cannot succeed in that particular business. The same is the case with stock markets also. You should know how stock markets behave, how shares behave, what are the factors affecting the prices to change, why there is a fall in a particular share price, why there is a rise in a particular share. All these fundamentals have to be understood if you need to trade profitably in the market. And believe me, it is not very complicated. It can appear to be very complicated because of all these new services and all, but it is not very complicated. There are certain fundamentals that we need to understand. And based on that fundamentals, we have to have a trading strategy. Everybody should have a trading strategy. Otherwise, it is very difficult uh, to survive in these stock markets, like in any other business. It's not different from any other business. So first, what you have to do, you have to design a strategy that is right for you. What do you mean by saying right for you? It will depend on the capital available with you, whether you are a high net worth individual or you are a normal person with a limited amount of capital to trade, maybe in the lakhs or in 10,000s of rupees or thousands of rupees. What is the regularity of income required by you, whether you can hold it for a long period of time, or whether you should get out of the stocks in a short period of time. Then periodicity of investments, whether you can invest only one time, or whether you can do systematic investments every month, every week, whether you can put in money into the market, whether you are looking for very large profits by buying a share and holding it for a very long period of time, waiting it to multiply 2 times, 3 times, 10 times. Is that the trading strategy that you are looking for, or are you trying to do swing trades where you are holding it for a few days and getting out of the shares with profit, etc.? So all these things you have to consider. You have to understand yourself, your circumstances, etc. And based on that, you have to design a strategy that is right for you. And second thing, you have to strictly follow the strategy with discipline. One day you are a positional trader, the next day you are a swing trader, the third day you are an intraday trader, fourth day you don't know what to do because you are so much overwhelmed by what is happening in the market and you don't get a clue and you quit trading with a huge loss. This happens to a lot of people. This has nothing to do with Sharia. This has everything to do with your trading strategy and your methods in the market. Fine. Now, I will just introduce you some basic things in the market before we wind up and move on to the question answer session. You have to understand all these things before you are going to make any move in the market. If you understand these things, it is sufficient for you. Then what you have to do, if you are a starter, just take very small amounts of capital into the market. You should consider that as a tuition fees that you are paying to your teacher. for learning certain things. You find out what is your trading strategy, how you are going to trade, what is the result of the positions that you are taking, what you are doing wrong, what you are doing right. You have to spend time in the market for maybe for 3 months or 4 months. You have to give quality screen time. Okay, so basic styles of trading, there is a scalping technique. What is scalping? You are trading for small profits, right? You at 9:30, the market opened at 9:15. At 9:30, you saw a particular share rising with very high volumes. You understand that it is going to move higher. You put an order, you buy the shares, and by 9:45 or 10 o'clock, you find that the share is 6 percentage up, or 2% up, or 3% up, because of the high supply, high demand in the market. The price has rise. The demand might be because of a particular institution is trying to buy the share in huge quantities. It can be a foreign institutional investor, it can be a mutual fund house, or some very big hedge funds, etc. Okay, as there was demand, the price rose, and at an opportune time, you sold it. 10 o'clock, 10:30. Now you have held the share only for half an hour, 15 minutes, whatever. Such trading practice is called scalping. The risk is minimal in this kind of trading, because in investments, in finance, higher the time horizon or longer the time horizon, higher is the risk. You don't know what is going to happen tomorrow. You don't know what is going to happen after 1 week. You don't know what is going to happen after 1 year. So much can happen. Nobody was able to predict that corona or the COVID virus will hit the world in such a fashion. Nobody was able to predict. Still, we are facing it. So, higher the time horizon or longer the time horizon, higher will be the risk. So, scalping is the safest possible way to trade. You get into a position, quickly take a profit, get out of that, then you're in cash. Now nothing is affecting you till you take the next position. The second style of trading is swing trading. What do you mean by swing trading? You buy a share, hold it for certain days because you see a good trend building up in that particular share. A good uptrend is building in that, so you bought it, and you fix the target, or you just watch how much the share is moving upwards, and after certain days or weeks, you sell it. This particular type of trading is called swing trading. Third is positional trading, where you are taking positions for a longer period of time. You spotted a very good company which have very good fundamentals, and also you analyze your technical indicators, and you understood that there is a good build up in that particular share. So many people are trying to get hold of the share because of some very good things associated with that particular company. You buy the shares, keep it for certain months or even for years, or you just kept it for years and years, like people like Warren Buffett, all those Rakesh Jhunjhunwala, etc., who are the famous traders in India, abroad, etc., positional trading. They also do swing trading, they also do scalping, but we get to know about positional trades of these very famous investors. So these are the basic three styles of trading as far as we are concerned. Next thing, we need to have an understanding in order to get into the market, in order to trade profitably. We should have an basic understanding of charts and indicators. Some basic there are hundreds and hundreds of indicators in technical analysis, and there are different types of charts like candlestick, Reiki charts, etc., etc. Don't get bothered about all these things. The basic fundamentals will remain the same. What you have to understand is that some basic knowledge of the charts and some basic knowledge of the indicators is required by every person who has to come into the market and understand how these stock prices are behaving, right? So what is the basic mechanism of stock prices? It is simple. It is like any other market, demand and supply, nothing else. The basic price theory in economics, that is, Whenever the demand is stronger, the price has to rise. Whenever the supply is stronger, the price has to fall. So stock prices rise when demand is stronger than supply. Now charts and indicators show the strength and patterns associated with supply and demand. What are charts? They are nothing complicated but basic indicators of supply, demand, and price. Price movement associated with supply and demand. And these are the charts that we are looking at in order to understand the recent and past price movements of a particular stock. Understanding charts and basic indicators are the key to good entry and exit from these stocks, and we have to have some sort of a knowledge about that. Right, now moving towards the end of this particular session, this is a basic stock chart, and I will give you some pointers regarding understanding a particular chart. These lines that you can see here, these are called trend lines. These are called trend lines. Fine. This is a particular stock price with varying types of movement over a period of time. Now, this particular line is depicting an uptrend. This is also depicting an uptrend. This is depicting a downtrend, and this is depicting a downtrend. So you have two uptrends and two downtrends in this particular stock chart. How do you identify an uptrend? An uptrend is defined as any movement which is registering higher highs and higher lows. See, every subsequent high of this particular chart is higher than the previous one, the previous major movement. Every subsequent low is higher than the previous lows. Stock prices don't move in straight lines. You will never get a stock chart like that. Like this. No, stock charts will never move like that. They always move in waves. So we have to understand what is it actually that the stock is trying to do over a period of time. If you just focus your attention here, if you just focus your attention here, you don't have a clear picture of the trend. If you just focus your attention here itself, in this particular point, you don't have a clear indication of a particular price. But if you see this particular length, you see that it's a clear uptrend, although there are many small sub-trends within this particular trend, which we are going to ignore. Because when you buy a stock, you will see that it is moving down. Then you will get panic. You will be afraid that whether this particular share is going to fall, whether I'm going to make losses. This particular thinking can be avoided only by understanding the basics of stock charts. So you have to learn how to identify entry opportunities with trends by seeing stock charts. This is the first skill that you have to master as a stock trader. Fine. So we have to identify uptrends and try to enter somewhere in the uptrend and let the trend continue, even if it is 1 day, 2 day, months, years, etc. Let the trend continue and sell somewhere higher. It is not possible for anybody to perfectly identify the lowest point in a trend and sell at the highest point in a trend. That is not possible. It is not possible for anybody, however big the investor is, because there is a saying in the market, you cannot time the markets. The only thing that you can do is to identify trends and make use of the trend by entering somewhere lower and trying to exit somewhere higher. Okay, I will not go into any further details because that will take a lot of time, but maybe inshallah at a later point in time if Allah permits. Now I will give you a very simple tool as people who are trying to enter into the market and trying to learn trading and trying to gain experience. By just looking at a particular stock chart, if you feel that whether it is possible to confirm an uptrend, or if you are getting doubts that whether this is an uptrend or it is just a sideways movement, what you have to see, you can use any free charting and financial websites like moneycontrol.com. It's a very popular website in India. Everybody who is involved with the markets knows with that. Moneycontrol.com, you just type the name of a particular share, you get all sorts of figures and charts with that particular share. What you have to see, SMA stands for simple moving average. SMA is simple moving average. You have to see 5-day, 10-day, 20-day, 30-day, 100-day, and 200-day simple moving average. Okay. So what you do first? First you take 5-day, 10-day, 20-day, 50-day, 100-day, and 200-day simple moving average of that particular share. Then what do? You see the current market price. CMP stands for current market price. And what you have to see, if the current market price is above at least three of these. Now you have 6 values here. You have 6 values here. You have to see at least 3. The current market price is above at least 3 of these values. You get a trend confirmation. If this is happening with a particular stock, you can be rest assured that it's an uptrend. Okay, so don't go for 1 because that can be a very weak trend or a very passing kind of a price movement. Not 2 is also good, but not enough, sufficient. For a confirmation of trend, you have to get CMP higher than any of these 3 longer term, any of these 3 simple moving averages. If that happens, you can say that is a simple way to ascertain an uptrend. I'm just giving you a tip here to understand. If you don't have a detailed knowledge of technical analysis of charts, this is something that you can use in your entries. Now, as far as trade management is concerned, you can do either focused trading. What is focused trading? Just focusing on one particular company at a time. You have 1 lakh rupees, you are going to trade with that. Just focus on particular company. Buy that. If it is below a certain price, you put a stop loss. You will not allow that particular share to fall below that particular price and increase your losses. Okay, so like for example, if you if you purchased a particular share at 100 rupees, there is a scientific way of putting stop losses, which we have to discuss on another occasion, but I'm just giving you the idea. Maybe you just said that my stop loss is 95 rupees. What you do at 95, if the stock reverses, you are expecting that particular stock to move up, but that did not happen because of some macroeconomic factors or some other stock specific reasons. That did not happen. What do? You cut your losses at 95. So the maximum loss that you will make is 5,000 rupees on your capital. Then move on to a particular other script where you will try and make up this particular loss. Another type of trading is a diversified trading, where with your available capital, you will select maybe 3 or 5 or 6 companies in which you will invest your money in a diversified way. So even if one share is not performing, if one stock or a company is not performing, there will be 2 other companies which will be performing, which will compensate your non-performance of certain other companies. Okay, this is the idea of diversification. That is another method of trading. Then there is the concept of averaging down. You bought a particular company at 100 rupees. Unfortunately, it came down. Then what you do? You buy on dips. What you do? You buy on dips. For example, I'll give an example like you purchase 100 shares, the buy quantity, 100 shares at a price of 100 rupees. Now you have invested 10,000 rupees in a company. Your average buy price is 100 rupees per share. Now, unfortunately, the price declined. What do? You don't sell off. You don't take a loss. What you do? Again, you find that at 90, after falling to 90, the stock is showing signs of uptrend again. You buy again 100 shares for any amount. What happens? You have invested 9,000 rupees, but you have got 200 shares now. 200 shares now, and your average price is only 90. You don't have to wait till 100 rupees to make a profit. till the moment the price hits 95, you have broken even, and above 95 it is your profit. Unfortunately, the stock fell again. What you do? Again you purchase at a lower price, 75, you again purchase 100. Again you have invested 7,000 rupees. Now this is the total amount. The sum of this is the total amount of investment that you have made, but your average price has decreased to 88.3. Now you have to wait only till 88.3 for making a profit. So this is the concept of averaging down, which many people don't do. What they do, whenever the stock price rises, they will expect that it will reverse, it will reverse, it will reverse, but it will come down 100 to 80, 100 to 75, then they will lose hope. They will think that now it is going to become zero, which never happens with a company, unless it is a insolvent company. It is only systematic and unsystematic factors that is driving down the prices today, and the trend will reverse. That we have to understand. So what will they do when the loss is steep, and when the loss is very deep? They will sell off, cut out, making a huge loss. If they had to cut out, they had to cut out at a very reasonable level at 95. If they were averse to loss, they should have done it at 95, which they will not do. They will expect at that time that the stock price is going to rise, but when it has fallen considerably, then only they will book the losses, which will affect a great affect their price, affect the capital in a great way. Will depreciate the capital at a huge amount. Okay. Now, the last and final thing that we have to keep in mind with particular thing is that it is not enough to make your entry proper. It is not enough to enter into a share at the right time and catching an uptrend. That is only half the story, or maybe that is the 70% or 75% of the story. Equally important, or if something that if you don't do will affect all your profits and will nullify all the good work that you have done, is not exiting at the right time. Because we know that stock prices just react to demand and supply. So as a smart trader, you should buy when it is low, sell when it is high, and it is giving you the right profits. So how do you identify exit points? Is what you do, the same method. You have got a good rally. Let us suppose you have purchased at 100 rupees. The stock rose 110, 120. Now, one mistake that people do, they see they will start thinking that the stock is going to hit at 200 rupees. Let me earn 100% on my trades. No, this is not the way stock market works. What you have to do, once you have entered, once you have got the trend right, then you should look at exiting as soon as possible, but don't exit too soon and don't exit too late. What will happen if you make it too late? Your profits will turn into losses. Okay, because there can be a huge fall in the stock. If you exit too early, it can affect your potential profits. You could have made more. So what do you do is that after the trend has weakened, after the trend goes up, it will start weakening. It will start to flatten. It will start to flatten. And what you continuously observe 5-day, 10-day, 20-day, 50-day, 100-day, and 200-day simple moving averages. Or even if you find that the stock price is getting weaker than the 5-day moving average, which is the shortest SMA, the short-term SMA, simple moving average, you can think about exiting. And no profit hurts you. Even if it is 1%, even if it is 2%, it does not hurt you, but a loss can hurt you. So what you do, you exit as soon as possible when you feel that it is opportune time. When you feel that the stock price is getting weak, you should exit and book the profits. Right? So compare the current market price with all these simple moving averages. When the current market price is lesser than 3 simple moving averages, what you should understand, the trend is getting weak. The upward rally is getting weak. It is time to exit, and exiting early is safer. You can book your profits and just be happy and enter into or make use of your funds elsewhere where you have a better opportunity. So exit from the stock and book a profit. So far what we have done here is that we have just seen the basics of what do you say, the basics of Sharia compliance in stock market, and
Sorry for
also
interrupting.
we have just seen the some basic tools for analyzing stock trends, and that is all with this particular presentation from my side, and I will pass the dais to the organizers to take it forward from here. Thank you very much. Wa akhiru da'wana alhamdulillahi rabbil alamin.
Thank you, sir. Thank you very much for your such a informing and engaging lecture, and we really enjoyed it, and we got lots of knowledge regarding this very special topic. And I think it will not be cruel if we can allot little time to the honorable participants to share their views, to interact them, to ask any questions or queries. I have unmuted people who did raise hand for asking questions, and I do request all of the participants, if you have any queries or questions, we can have I think 10 to 15 minutes, or if needed, we can go beyond that. I invite Mr. S.M. Subhan to ask the first question. You can just unmute yourself.
Hi, this is Suvan. See, I want to know, there is some confusion whether there is intraday is halal or not. Can you clarify that one? And I want to know whether forex is also halal or not.
Okay, so there are two parts: whether intraday as such is halal, and second thing is whether forex is halal. Let us take the first thing, intraday. Intraday refers to, see, first of all, you have to define what do you mean by intraday. Intraday is simply, in essence, what you are doing is that you are buying and selling, or selling and buying, as the case may be. If you are short selling, you are first selling, then buying. If you are going long, you're first buying and then selling on the same day, without any carriage of the shares. So those people who say that there is a Sharia issue with this, what they are saying is that in the stock market, the settlement happens in T+2 basis, on T+2. What do you mean by T+2? Trading day plus 2 days. So you have a demat account with you where all your shares that you have purchased is getting credited in an electronic form. Earlier it was physical shares. So what happens is that your transaction in the stock exchange happens, then there are a lot of institutions involved in the whole settlement process. There is a clearing house, there is a depository participant, and there is the stock exchange. So all the documentation, etc., happens within 2 days, and the delivery of the shares happens to you, to your demat account, within 2 days. So this is the legal side of the whole thing. What we have to understand here is that there is a clearing corporation which ensures the delivery and payment of all participants in the market. So when you are buying a particular share on the stock market, you don't know who is on the other side. You don't know who is on the other side. There is a seller for sure. If I am able to buy, there should be somebody who is selling. So you don't know him personally. Still, you are very confident and you are buying the shares because you are sure that if I am buying, I will get the delivery. How does this happen? This happens through the existence of clearing corporation. Clearing corporation is the universal counterparty to all participants in the stock market. So what happens is that if you buy something, the clearing corporation ensures that the delivery is fulfilled to the buyer and payment is made to the seller. So when we say that when you are buying in the same day and selling on the same day, what people say, those people who say that it is not allowed as per Sharia, what they are saying is that you have not taken delivery of the shares and you don't have ownership of the shares. Whereas this is only technical. This is only technical because if you have your money in the trading account and if you have purchased something, you have put your order there and the order has got executed, there is no question regarding delivery. You have already got the ownership. Now what is pending is the only the legal documentation, which is not an essential condition for sale. Okay, so what according to me, as far as my understanding goes, there is no problem as far as intraday is concerned. You can buy and sell on the same day. Now, there is second thing, that is use of margin for intraday trading. The intraday trading, the broker will give you 7 times, 10 times, 15 times margin so that you can buy and sell more. Now, we cannot say there is any explicit problem with it, but this certainly increases the chances of loss on a huge scale because there is a leverage effect in finance. When you use leverage, the amount of profit will be lesser than the amount of losses if the price falls. For example, you bought it 100 at 10 times leverage. What profit you can make at 101? It is lesser than the loss that you will make at 99. That is called the leverage effect in finance. So as such, intraday, we cannot say that it is prohibited. But it comes with a caveat that if you are leveraging your position in intraday with the money that you are going to leverage that you are going to get from the broker, you will face a situation where it will be very difficult to sustain the trading for a long period of time because official studies show that 90% of the people intraday make losses. Only 10% people are able to succeed with leverage intraday trading. Normal intraday trading, whatever you are buying with your own money, no problem at all. Only leveraged intraday has got a issue, that is safety of the investor and trader. There is a high risk and might be even falling error. You are hurting yourself, you are not able to control it. I hope that answers the first part. Second
And
part, just a minute. For foreign exchange, the forex market is a futures market. The global foreign exchange market is a futures market, and no futures transaction is allowed on currency as per Sharia because it violates the rule of surf. It violates the rule of surf. That is, you have to do it on spot, and you should not change the values on a futures contract. So, futures currency market, majority of the people, majority of the scholars, they don't allow it, and they are citing reasons from Sharia. Thank you.
it's wonderful explaining. And I do request Dr. Yusuf Nalagat to raise your comment. Sir, please. Dr. Yusuf Nalagat. And also I request honorable resource person to have a look in the chat box. Then you can go through all the questions and comments. It will be beneficial for all of us. Dr. Yunus, you can just unmute your microphone and.
Hello.
Yes.
Hello.
Yes, sir. Yes, sir. Please.
I have two questions. The first one is, what about commodity trading when actually the commodities are neither available and never transferred? Second question is, somebody knows that the prices of one particular share is increased due to bull operation. Is it appropriate to buy those share at that time?
Okay, sir. Thank you very much for raising these important concerns, and our research person will comment on it. And also, I request all the people who have raised their hand, don't unmute now. Whenever you get a chance to ask questions, that time only you can unmute. Otherwise, lots of noises are coming. I think you are understanding my point, and I humbly request Mr. Jamil Sajjad like to respond the raised comments from Dr. Yunus.
Yes, Yusuf sir. So the first question, in commodity market, you're saying that there is no delivery happening, which is not right. Commodity market has got a delivery mechanism. Although it is a MCX is a futures market, what happens is that if you keep your futures contract till expiry, that is when the expiry day comes and you have not sold or you have not squared off this particular futures contract, then you will have to take delivery by paying full amount. For example, if they were allowing 10% margin for something, for a commodity which is costing 5 lakh rupees, you just put in 50,000 rupees and you entered into a futures contract, and within the time period before the expiry you did not square off, definitely you can, what you can do is pay the full amount, 4,50,000, whatever is the shortage, take delivery of that particular uh, commodity. For example, it can be crude oil, it can be copra, etc., etc. But what the exchange does is that exchange stores that particular commodity in a warehouse under the purview of that particular exchange. For example, if you are dealing in cash crops, for example, commodities like pepper, you have a you have an exchange MCX warehouse at Wagaman, near Wagaman in Idukki, which is close to the market. Okay, so it is the notion that delivery never happens in the commodity markets is not right, because that particular notion comes to you because many times we don't understand the macro structure of the market. We just understand the screen operations in the market and we ignore the macro operations of the market and the macro structure of the market. Okay, so delivery is happening, delivery is possible, and it is not necessary that you should take delivery. That is the only thing with commodity market, commodity futures. So as far as futures is concerned, even Salam, as it is explained in the book of Hadith, Salam was a contract in which only the delivery was only on a future day, but payment was done on spot. The only problem with the only Sharia issue or the difference of opinion regarding commodity futures is that whether it is permissible to pay only a part of your total amount on spot and differ. And there is certainly difference of opinion among scholars. It is not 100%. There is no ijma between scholars regarding any commodity transaction of a futures nature can be halal without paying the full price. So those people who say that for that particular transaction to be valid, you have to pay full 5 lakhs if you are buying 5 lakhs in commodities. Just paying 1 lakh rupees and then having a title to the whole futures contract cannot be valid. So that is the majority opinion on that. But even certain Islamic finance houses do invest in commodity futures, and saying that there is no delivery mechanism is not right. That is not factual. There is a delivery mechanism. That actually it gives a great advantage to the participants because they don't have to store all these bulky commodities in their own warehouses, where it will be very difficult. Everybody cannot do it. So if you are buying pepper, if you are buying copra, if you are buying crude oil, the delivery, the storing, everything is taken care of by the exchange. So it is a very good service. Second thing, what you have asked about is bull operation. See, let us first understand, as I told you in our particular presentation, the webinar, the slides, how does the price of a particular commodity rise? Anything, shares or commodities or any other items, it is because of a strong demand. A demand which overpowers the supply is what is driving up the prices. So what happens in the stock market is that broadly there are two classes of investors: the retail investors and the institutional investors. Retail investors are investors like us, or traders like us, who go there with small amounts of money, lakhs of rupees, and who are trading in the market by buying certain shares in a limited manner. But institutional investors are those investors who have a lot of money. Why do they have a lot of money? Examples of institutional investors are mutual fund houses. Mutual fund houses plot a lot of schemes and they take the money from the market and they have to buy shares for the investment of this particular money. Then you have foreign institutional investors, which are institutions like the Indian institution, but they are based out of the country. They can be US based institutions, they can be European institutions, etc. Then there are big hedge funds. So when these people, when they are getting into a particular share, they might be requiring shares in lakhs. They want shares in lakhs. The number of shares that they are going to buy is very high compared to retail investors. So how can they do it? The moment they punch in their orders, that is, for example, if they are buying, say, for example, Tata Motors, if a particular institution is buying 10 lakh shares on a particular trading day, or it is very obvious that they are not going to get 10 lakh shares at a fixed price from the market, because when they punch in a large number of orders, the demand is jumping compared to supply. You don't have that much supply on that particular day on that particular stock in the stock market. So when they punch in a huge number of orders, the stock price just goes up. This is what we call rally. This is not operation. This is not illegal. This is normal market mechanism. What is illegal? What is illegal? Illegal is insider trading, stock operation. That is artificially trying to inflate or deflate the prices of a share by those people who have insider information. That is illegal in India. That is illegal everywhere, because trying to influence normal market mechanism is a financial fraud. It is something illegal in Islam also. That is why Prophet said you should not indulge in black marketing. What does a black marketer do? There is no actual demand for the product or a commodity, but he just quotes it. Okay, essential commodities, and he just tries to play with the demand and supply. But that is not what happens with bull markets or bear markets. Bull markets or bear markets happen due to the equilibrium, the absence of equilibrium between demand and supply, which is the mechanism that happens in any market. And whenever the equilibrium is re-established by a rise or fall in price, then the markets, the prices will be more stable. Hope that answers your question, inshallah.
I do request Mr. Usman TV to raise his concerns. If you all know, this is not a small topic. This topic is as well as large, and lots of disagreements, disputes would be there, and we welcome all the disagreements and your concerns and your criticism also. But this is a humble beginning from our department and our college. We all of us can go ahead for further studies, detailed studies, according to the the primary documents or doctrines of Islamic Sharia. That is the base, this, and people will have lots of disagreements. This is possible, and this is natural also. Mr. Usman K. And Shamil sir, I just request you to have a look on the chat box. And after this question, we will probably move on the instant response to the all questions. You just read the question in 1 second, and you can also respond in 30 seconds or 1 minute, like that. I think you are ready for that. It will be more interesting.
I just want to take the chat box. I'm just searching for that.
You can go through this, and I'm waiting for Mr. Usman or any other participant. We have lots of professors, heads of the department, deans and academicians, also entrepreneurs from across the world. Lots of expertise are there, and we do acknowledge all the involvement and serious participation and active cooperation of all of our friends from different fraternity. And this is a humble beginning, and we will go on with more academic activities, and we will keep in touch with you. Anyone asking question directly, otherwise we will go to chat box, and our resource person Jamil Sajjad will respond quickly, instant responses. And his details, credentials are here. His phone number and mail ID, website also here. You can just communicate with him anyways without any hesitation.
Okay.
Anyone asking? Yes.
Assalamualaikum. My name is Usman. I'm calling from Doha. My question is, there is Sharia compliant Nifty 50 Sharia and Nifty 500 Sharia. How we can understand the companies under this index?
Okay. So, Mr. Usman is
That's my question.
asking. Yeah, I got it. Mr. Usman is asking, how can we understand, or how can we know which companies are there in this particular indices, right, sir? So what you have to do is, you have to go to BSE website or NSE website. Fine. National Stock Exchange website, you go there. If you search on the website, there will be the indices provided by the stock exchange. Got it? Okay, so in the indices, you will find Sharia index. Okay, you click on that. You click on that Sharia index, then you will get the details about that index, like which all companies make up the index. In that, you will get to know the name of the companies. So NSE 50, NSE Sharia 50. First, you go to NSE.com. That is the official website of National Stock Exchange, NSE.com. There you will find a section where all the indices of that particular stock exchange is listed, like Nifty 50, Nifty 500, Nifty Mid Cap, etc., etc. In that, if you skim that list, there will be Sharia 50 also. Click on that, go inside the page. There will be listing the companies which is currently constituting the Sharia index. That is how you do it. Okay.
So for that purpose, they are asking the payment.
No. You don't have to make any payment for knowing the name of the companies. You have to go to the National Stock Exchange website. You don't go to any other website. National Stock Exchange, NSE.com. There you will find the index. Click on the index, because the NSE provides details about all the indices that it is providing. The chances are that you would have visited some other websites. So please do check that. In case you have any problem, you get in touch with me through mail or something. Okay.
Okay, thank you very much. I do apologize all the participants for the inconvenience to accommodate your questions and to entertain your interactions. And we actually had a time with and actually we exceeded our time limit also. Now I request Shamil Sajjad to go ahead chat box and to just have a comment in a couple of sentences for all questions if you can.
Okay. So somebody is asking, the main issue, how can a common person do the screening of companies to know whether a particular company is Sharia compliant or not? For a common person, doing the Sharia screening on a large scale is difficult. I understand. But if you have a list of companies which you are looking at, for example, you have a list of companies like Tata Motors. So you have done some general research. What you have to do is that first you have to make a watch list of those companies which you like. Okay, you feel that these companies are good for investment. Second, you move on to Sharia screening. So Sharia screening, how does it happen? I have listed down the process. First, you have to see in the website of the company. You visit the website of the company. Just Google it. You will get the website of the company. See what is the stated purpose of that company. Every company has to state the purpose of its existence. So go to the website, see what is the stated purpose. If a company says our purpose is to manufacture textile materials, there is no problem with that. If a company says our purpose is to manufacture automobiles, or by looking at the operations of the company itself, you can say that whether that particular company is involved in Sharia repugnant activities. That's the first level. Second level, you go, there will be a tab. According to the company law in India, every company has to provide every publicly listed and public limited companies has to provide the financial details on its website. That is a stipulation of the Indian company law. So what you do, you go to financials in the website. You download the latest profit and loss account and balance sheet. If you understand all these things, if you are a person who can handle all these things, what you do, you download the financial statements. Then I have given you the ratios. You take the figures, see what is the ratio, what is the leverage ratio, what is the liquidity ratio, what is the interest income. If this is not possible for you, second option is, in India there is an agency called TASIS, Taqwa Advisory and Sharia Investment Solutions. They are the people who do screening part. Okay, if you are investors like us, we get a subscribed list. We get a subscribed list from them, but they don't do any investment advice. They don't give you any investment advice. If there are 7,000 companies listed on the Bombay Stock Exchange, what you will get from TASIS is the list of those companies which pass the Sharia screen. Nothing more. They will not give you say that this company is good for investment, that company is not good. No, that is not their job. Second is you pay a subscription to TASIS and buy the list. Third is to come to service providers like me. What we do is that we already subscribe for TASIS. Apart from that, what we do, we just do fundamental and technical analysis, assess the current trends in a particular stock, and give us stock list, daily mailer to people who are interested in the stock market. And see, any amount of analysis will not guarantee you long-term success, or will not give you a guarantee that the stock price is going to move only in those direction, because so many things happen in the stock market. But you can, with good entries and with good trade management, you can invest successfully in the stock market. So if you are interested in such a mailing list, you can contact with me, or you can contact TASIS directly if you want the full list of shares, and in that you will have to do all your analysis. Or if you are a technical financial person, or if you are good with accounting ratios, etc., you can do it on your own. Go to the company website, check for the ratios, check for the business of the company, you have it. That is the Sharia.
Thank you, sir. You can just go across some important questions also. I know all questions are important, but we all of us understand the limit of online platform. We cannot go ahead more by taking a long time in online platform, and people are differ from one from another by using their data and network and all these things. They may have lots of discomforts with them. That's why we are humble to conclude or wrap up this session now, and I just request Shamil Sajjad sir to go across some relevant questions to just consider this, and you are welcome always to ask any questions and queries to Shamil Sajjad. Over the Department of Economics and Islamic Finance, Madinatul Arabic College is always prepared to entertain any communication regarding Islamic finance and Islamic Sharia.
Yeah. Some people are asking about the Tata Ethical Fund and Bajaj Pure Stock Fund. Let me tell you about this, because this is very important, because many people will not be investing in the stock markets directly, but will be preferring mutual funds, because that is professionally managed and they don't have to look at the stock prices every day. So Tata Ethical Fund is the first Sharia compliant, Sharia certified mutual fund scheme in India. It was launched in 1996, and if you go to Tata Asset Management Company's website, search for Tata Ethical Fund, or just Google Tata Ethical Fund, you will go into the Tata Asset Management Company's website. There you will find in the scheme information document or the section where the company says, because every mutual fund scheme has to mandatorily give you scheme information document. That's a legal requirement. In the scheme information document, you will find the objective of the scheme. What is the objective of the scheme that particular scheme is trying to accomplish? In that, they have written down this is a scheme, this is a mutual fund scheme which is managed according to the principles of Sharia. So they have a Sharia advisory board for that. So what they are saying is that Tata Asset Management Company has got hundreds of schemes. Every mutual fund house will have a lot of schemes. Within that, one particular scheme is Tata Ethical Fund. They have named it Tata Ethical Fund. And the objective of that scheme is to make investments according to the existing Sharia screening norms. They follow the screening norms which we have discussed in this particular webinar, and they screen out all those companies in which the Muslims cannot invest, and they will give you a portfolio in which only the investments will be made only in those portfolio, so that your investments are Sharia compliant. This is the first mutual fund scheme in India which announced that it is a Sharia compliant scheme. Second thing is Bajaj Pure Stock Fund. Bajaj Pure Stock Fund is a scheme which is just like a mutual fund scheme, but it is a ULIP. Plan. What is a unit linked insurance plan? It is an insurance plan where the investment of your money, the premium will be invested in a mutual fund scheme, and your insurance value will be related to that particular fund value. So the problem with the traditional policies like the LIC's policies and all that we had is solved to an extent with ULIPs. And in that Bajaj Pure Stock Fund also, it is a Sharia compliant fund, just like the Tata Ethical Fund. The premium that you pay, that will go into a mutual fund scheme, that will be invested only in Sharia compliant companies. And on top of that, there is an insurance, life insurance coverage also. That is the difference between Tata Ethical Fund and Bajaj Pure Stock Fund. Bajaj Pure Stock Fund is a ULIP, unit linked insurance plan, whereas Tata Ethical Fund is a mutual fund scheme. That is the difference. Hope that answers the question. So, do we have?
Thank you, sir. Thank you, sir. I think we can just conclude now. Before wrapping up, I would like to request Dr. N. Muhammad Ibrahim from New College, Chennai, to ask his question. Sir, Dr. Ibrahim, New College. You can just unmute your microphone. After that, I will call up our assistant professor, faculty of Department of Economics and Islamic Finance, Professor Abdul Latif AP, for extending vote of thanks. Dr. Ibrahim, are you here? You were asking lots of questions. That's why I just unmuted your microphone. You can just utilize this opportunity. Once again, I apologize to respected participants from different parts of the world. You actually enrich our event with your serious participation and active support. We will be grateful to all of you for your interest and your enthusiasm to be with us. But we are having some limitations in online platform, and in our college every month we are conducting webinars, informative webinars in various departments. Each department will conduct a webinar, and in lockdown also our IQC have conducted 2 important webinars on online learning and the health preparedness in the post-COVID situation. And I am waiting for Dr. Ibrahim. If he is not available, then we will.
Hello, sir. Assalamu alaikum. Assalamu alaikum.
Wa alaikum assalam wa rahmatullah. Yes, sir.
Sir, in our India, we Muslim people are near about 20%, but our participation in the stock trading and stock investment, they are very less. Why don't our Islamic institutions, Islamic organizations establish a separate Islamic Sharia compliant mutual funds by which all the Muslim society of India who do have their money for investment can make without any hesitation in the stock trading and stock investment? Why people are trusting only in Tata Mutual or Bajaj Mutual funds? Why don't we have a separate exclusive market in which not only the Muslim society of India, but also other people having trust in these trusted funds invest widely? Why don't we have such a platform for Muslim society? This is the question.
Thank you, sir. Thank you, sir, for raising this such a relevant and timely question. And our resource person finally respond to it. And after that, we will wrap it. But and also, I do inform all of us the program is uploaded in Facebook. One plus live stream in Facebook, and also we will upload the video, the complete video in our YouTube account also.
Yeah.
And one more announcement. I do request all the participants to submit the Google feedback if you wish to get the e-certificate, and if you wish to modify this program to help us and support us for betterment of our events. Sir, please.
Yeah.
Shamil.
So, sir, the problem that you have pointed out is very, very relevant. Statistics tell us many studies of many commissions appointed by the central government from time to time, Raghuram Rajan Committee, etc., has pointed out that the participation of Muslims in India, although they are 13 to 14% of the population, is less than their representation in civil services. So our representation in civil services, we know that it is very low. Our participation in the financial markets and financial institutions is still lower than our participation in the that is the situation. So that is the situation. Now, the second part of your question: why are we not able to, or why anybody is not coming up with such institutions? Now, first answer answers the second answer also. We don't have any representation in the financial markets. We don't have any know-how of the financial markets. We don't have competent people who can plot institutions in the financial markets, which is of a national presence. We have many institutions which are very regional, very small, but we don't have any institution that is of a national scale and repute, just like other big institutions and banks, because we are simply not capable of that because of our long-term non-participation in the financial markets. Now, there is an approach, there is a disposition in your question, because what you asked is that why are we going behind other people? Why can't we do it on our own? This is not a healthy attitude. Why? Because we are living in a plural society. We cannot have our own compartments in a plural society. Trying to create our own compartments in a plural society is very, very unhealthy, because what it will do to the community is that it will alienate the community further from the mainstream. So if you say that, when they say, okay, we understand that we have certain beliefs, we have certain rules to follow, fine, that is the end of the story. You observe those rules, you understand that you have to follow certain instructions by the dean. Then if you have understood that, that is the best part. Next, what you have to do, you have to search for existing opportunities. You have to search for existing opportunities. Why should we say that? Why should we go behind Tata in order to invest in their mutual fund? Rather, you should say we congratulate the Tatas for bringing at the mutual fund like that, because Tatas is managed by a Parsi community. You know, the Tatas are Parsis. They are also more minority than us. Parsis are very, very small minority in India. They are very huge industrialists. Now, if they are plotting a mutual fund scheme for people who have very small representation in the financial markets, they are doing a good service to you. Why don't you say that we appreciate whatever opportunities available now, invest them? The only reason why more mutual funds and more institutions did not come up in India is because of the lack of response from the community to the opportunities presented to them. If investments in Tata Ethical Fund were satisfactory and very good, They would have come up with more financial products which are Sharia compliant. They would have hired more people to in their Sharia boards, and they would have come up with more products in which we could have invested. But we are not doing that. We always say that we have to do it on our own. And when we say that we have to do it on our own, each and every section in the community will start saying that no, we will do on our own. We don't follow. This is not a healthy uh, disposition at all. What we have to see, we have to just go see what Tata Mutual Fund is doing, what Tata Ethical Fund is doing. They have just explained their methodology on their website, what we are doing with your funds. We have just taken your fund and we are investing in such and such companies. First, respond to that. Improve our participation in the financial markets rather than running away from it in a productive way, following your principles in whatever way you can. Because even even Deen is asking us for that only. La yukallifullahu nafsan illa wus'aha. Allah does not impose anything on a soul which it cannot do. So defeating the whole system and creating our own system, rather than thinking like that, we should try and incorporate ourselves to the existing system, change slowly. Within the fabric, we have to create our own space, and we have to grow along with the mainstream. That is the healthy way of progress. Hope that
Thank you, sir.
answers.
Thank you, sir, for this vibrant answer. Actually, this is the need of the hour, and we cannot go separately beyond from this plural society. And Islamic finance, if the name denotes it's Islamic, only an Islamic topic. This is a general topic. Countries like UK and all Western countries are coming behind this area, and they are starting Islamic banks and all these things. And we are opening a way to all of us. But unfortunately, Muslims are very less and very backward in this topic or in this area in the investment and all these things. Okay, anyways, we are concluding here, and I just request our resource person to give a 1 minute takeaway message to all participants and to our college staff and students. After that, I will call our assistant professor Abdul Latif for vote of thanks. Jamil sir, a takeaway message from you.
Yes, sir. Thank you very much, and I'm very happy and I appreciate Madinatul Uloom Arabic College Islamic Economics and Finance Department, yourself, and Muhammad Hashimi for taking this opportunity to bring up such a relevant topic, and it was organized beautifully. Everything went very smoothly, and I'm also very happy with the number of participants who came in and also asked very meaningful questions. Let the dialogues continue. Let the ideas float and flow from each of us, and may Allah make our tomorrows better than our yesterdays and today. Jazakumullah khair. Assalamu alaikum wa rahmatullah wa akhiru da'wana alhamdulillah.
Thank you, sir. Thank you very much for sharing your valuable time with us, and we will be grateful to you. And also, we will communicate with you for further initiatives. I request our assistant professor Abdul Latif AP to express thanks and gratitude to all the participants. Mr. Abdul Latif AP. You can unmute your microphone. If there is a technical problem, we do not believe in informalities, and we always do your support and your suggestions to modify and improve our academic practices here. And I think Abdulatif is, I already mentioned you, all of us are actually struggling with the problem. If the governments and the authorities are promoting online education, but a country like India, it is not possible nor practical. People are, dying with starvation and unemployedness. How can they afford all the 5G or 4G things? It is not possible, and the Wi-Fi connection is not still a dream in 70% of Indian houses, and we do understand. And Abdul Latif sir, are you here? Yes, yes. But you have to unmute your mic, Abdul Latif. Unmute. You are mute now. We can see you, but we cannot hear you. Unmute yourself.
Okay.
Okay, you
Sir?
can start. Yes.
Am I audible?
Yes, Pakka.
Assalamu alaikum wa rahmatullahi wa barakatuh. Respected and most distinguished chief guest of today, Professor Shamil Sajjad sir, respected Principal Dr. Sayyid Muhammad Shakir sir, honorable professors, staff, participants from various parts of the world, and my dear friends. I deem it a great honor to propose the vote of thanks to all who have helped us in making this seminar such a resounding success. First of all, I would like to thank our chief guest, Mr. Shamil Sajjad sir, for gracing today's seminar. Thank you, sir, for your interesting and thought-provoking address, making excellent presentation, and making this seminar very interesting and meaningful. I would like to express our profound gratitude to our principal, Dr. Sayyid Muhammad Shakir sir, for his great support to conduct this seminar. I am very happy to express my gratitude to our HOD, staff members, and other participants who have made this seminar a grand success. I would like to thank the coordinators of all the event for making this seminar a great success. Once again, I thank all for your cordial coordination. Thank you, sir.
Thank you, Mr. Abdul Latif. And I also request all the participants, we have shared the Google form of feedback here in the chat box. We will continue the meeting for more 5 minutes to submit the feedback if you wish to get e-certificate, and also we need your suggestions and criticism to improve our academic things. Our meeting is officially dispersed here, but we will wait for the remaining people to submit their Google form.
Thank you. Assalamu alaikum.
Yes, sir. Thank you very much. Jazakumullah khair. It was a wonderful experience for us, and the people from Islamic Finance Fraternity will remember you, and they will be most probably troubling you for getting more support and assistance on your technical expertise.
Inshallah. Jazakumullah.